Good weekend. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, your weekly edition. So we'll only look at weekly charts, and this is Friday, and we are at the 8th of September, 2023. I figured I'd put this out now. It gives me a free weekend, and I can enjoy myself because it's beautiful in Chicago. It's not that way around the country, I know it, but we're going to be a high of 79 over the weekend. It's just gorgeous outside, 70s now, 60s at night. You want to be here. It's one of the prettiest times of the year in the city. And we'll probably get up into the low 80s next week, but the big heat should be all gone for good now. All right, what isn't going to be gone is me. And guess what? September, what does that mean? I can tell you what it means to me. It's time for a live webinar. I don't do them during the summer. You're gone. I'm too tired. I don't want to do it. I have other things to do at nighttime. I run around. But now the live webinar, the question and answer. It's going to be this coming Thursday at 12:30 p.m. Central Time. Your invitation was mailed if you have an email with us. If not, you just move your cursor up here. Now, what I prefer you do when you sign up, and many of you will, is write me your question. After you sign up, you're going to get an email. It's going to have your user ID code. It's going to have the link to get into the webinar. You have to have the code to get in, no question about that. And seating is limited. But I don't have what Kramer has. I don't have a staff putting together charts. You think this man just hits a button and that chart's right there for him? They know what's coming. They know what's there. People are screening the people on the phone. He already knows what's happening. That chart didn't just appear. And the other things he's doing, he's got a teleprompter with words. I don't have a teleprompter with words here. And when we do the live webinar, it's me. Give me the benefit of being able to create the charts and do it. The webinars are 20 minutes long. I start at 12:30 and I finish 20 minutes later. They are not recorded. I record them for regulatory purposes. I refuse to post them. What I post are my special reports. What I post are my daily videos in the morning. But this, I want you in. If you can't make it, c'est la vie. If you can make it, I'm there. I try to answer every single question that's thrown at me. I go fast with it, all right? You learn. I come out. If I know something, I'll say it. If I don't, that's how it goes. I just don't, and I say, hey, I don't know. I don't have the answer to all that. Nobody does. And it's an important week. Why? Because this week we get core, PPI, and CPI. I'm holding it Thursday because we'll already have those numbers. We can really talk about them and see what they do to the markets and where we're at. So I hope you come. Move your cursor up here if you didn't get any of our invites, and we'll get you into our list so you can get them in the future as well. All right. So let's go, if we could now, over to the markets. Now, as I said, this is all about weekly charts. We do the daily at the end of the day every day. What do we have? We have a dollar that's in a runaway pattern. We have crude oil that's never ending to the upside. I think you'd agree with that. We have real interest rates that have been climbing. They seem to have stalled out a little bit over the past 48 hours. And that's what we have at this point in time. NVIDIA is correcting. Apple's been one ugly stock, as you know, this whole break that we've had. And people are now saying, I laugh when I see this because, it's probably one of the widest held stocks there is in America in portfolios. Well, I knew it was overvalued. Sure you did. That's why they drove the valuation into those trillions of dollars. NVIDIA. Trading right now, if you think of the aftermarket, this stock was aftermarket, remember, hitting in the 520s, you're back in the 450s, okay? Everything, my friends, gets over or undervalued over time. That's just how it works. Is that what's happening to Darden Restaurants, DRI? We're going to finish up, and then next week I'll have something else that I want to cover. This has been straight on down. This market peaked out here in the 172 area. Look at that, 149. 173.06 was the exact high. Higher high, lower low. This whole break has been trendless. It's been what I call a vertical price break. A trend normally has, on a downtrend, lower highs, lower lows. This didn't. This is a market that started right here, going with higher lows, peaked out, and then gave back a big chunk of that, almost 2/3 of that whole move. That's quite a bit. So it's at a point where it's vulnerable for the bears. This could be where the market tries to grab its legs. It's been straight down. So what could support this market? See the Bollinger Band, the black line? You're right there. What are the odds of staying under that? 5% of the time. How many moves under it in a row do you normally get before you pop? Not more than 5. You already got 1, and it doesn't have to do 5. If you look at this, you get 1 or 2 often, and that's about it when we look at it. So you're very vulnerable in this market right now that at any point you can get a spin back in the market. That doesn't mean it can't go lower and later, but I question if this market hasn't, with the oversold condition and all, been the point where you go, maybe I take my money off the table. That's up to you, but that's what I think. Microsoft is still acting very good. It's come alive. It's one of the better looking tech stocks out here. It's got the higher lows, higher highs. So until this market steps back under 321.72, I have a feeling that what you're going to see are the pros buying this market at 330.89. Stops under that number wouldn't surprise me, to see if they can push it to the Bollinger Band into the 350s. Obviously, with the core PPI, core CPI, a lot going on there. We're going to hear, once those numbers are out, the Fed's going to be on hold, or the Fed's got to move here. I am neutral right now. I realize that if you go to the CME Fed Watch page, write that down, and just type it into Google, you see the probabilities, and they're very, very extreme that the Fed is not going to raise rates 25 basis points. I have been by myself saying it is not just the jobs data. It's core CPI and PPI. They'll also look a bit at retail sales, which are this week. You have an awful lot coming out right now. Be careful. That's my words. I will join in the camp then as to what I think as soon as I see those numbers, because you don't get the Fed until the week after. I am truly on the sidelines right now. KRE, this is a real important number. I was reading, we saw the bank, I think it was First Republic, go under. Remember, 4 months ago or whatever? There's another one that they were writing about today. The name's reversed. So I think it's Republic First, and it was in the Wall Street Journal, an article. I think it was either Market Watch. It was one of them. I get so many. And I read the whole thing, and I'm going, uh-oh, here's another bloodbath happening. Same type of situation. All it takes is one to start a contagion. Be careful. That's my words. If this market now closes under 43.25, it did not. It settled at 43.36. But if it settles under there, everything goes bearish on it. Right now, the bias is up. The trend is down. Momentum is down. It will take very little to push this market to lower levels. MCHI. So at the end of the week, we're at 43.89. I am in the bear camp against the 18-week average. I'm aware that we're getting into a rarefied territory of getting oversold, so you've got to have caution. You don't want to get last week, not this week, the week before's high taken out up here. As long as that's not taken out, you still have a shot at 42.59. Just don't overstay your hand. In XLI, the trend is down. The bias is up and momentum is down. What a mess of a chart. In order to turn this down, you've got to close underneath this 105.27. That would do it. Then I'd have the bias down, but you got to settle there by Friday. This is Friday of the week before. In the energy sector, bullish. But are we getting a bit too rich here? Could be. Just got to be careful. What are the odds if you buy a Bollinger Band or over it that you're going to be fine? It's dangerous. You do get, and energy is streaky. That's the right word. It does like to hit it, but it backs off and gives you opportunities. I am never one to tell a trader to buy the band. If it's embedded, and what makes a market embedded, if you've taken my Bollinger Band course, you need to have both numbers that make up the slow stochastic for several weeks or more over 80. Week 1, 2, 3, you got it. I don't care about the one before. You got your 3, that's several. A couple is 2, several's 3 or more. And there you go. So on pullbacks, there's a way to come in. I'm not going to share it here. Take the course and you have it. Very tricky too. but I'm looking at that hard. UUP, not embedded. So I think the pros are taking money against Bollinger Bands, and I know you're going to tell me I'm crazy. I get it, I am. And you'll say it's going to the moon, but it's always going to the moon. It could go back up here. I'm not going to argue that. But I am not one to buy a market unless it embeds or it's not overbought. One of the two, with the other signals that are bullish. Both numbers are over 80 this week. Were they over 80 last week? Oh my gosh, they were. What about the week before? They weren't. This is a defining week. And gee, core PPI, core CPI, retail sales, and then going into the FOMC meeting. So a nice run up in front of it. You don't think the pros are going to take some money off the table? I do. Doesn't mean I'm right. Gold is bearish. Lower highs, lower lows. My argument on gold has been this. The Fed is fighting inflation. They're determined to get it to 2%. The dollar is on fire. You've just seen that. You're getting 5.25% to 6% on some instruments you can buy in short duration. Why do you want to own gold? Now, who's buying gold is China and other countries. I was looking today at their reserves. They added a heck of a lot of gold last month, a real lot. So they are doing that. And they're looking at their currency, and, you know, they're at, 7.3 and a fraction? I mean, their currency is weak as can be. Where are they going with it? So, you know, in something like that, they look at it and they go, well, if I sell gold and I had to defend my currency, just understand this, gold's traded in dollars. They're going to get dollars, a lot more of those that buy cheap wine. That's how these things work. Lower high, lower low, resistance. I would not want to be short if the market cleared 181.12. As long as that doesn't occur, I think the bears have control of the market. If gold's no good, what do you think GDX is? To get GDX good, you got to clear all of this, the 200 week, the 100 week, and the 18 week. I don't like it as much as I do the short side of gold itself because it's in an oversold territory. Tesla's given back an awful lot. They're not acting terrible. They peaked out against the Bollinger Band. They ran through it, and they stayed for a while over the 100 week, and then boom, they gave it all back, and suddenly that's become the resistance point again. The chart gets bullish again. You heard me, bullish again, if you can take out last week's high of 261.18. Barring that, if you close under 239.16, the bear market comes alive. You're at a cusp right here where the market's got to make a decision. Uber has been good. I mean, the cities are back. You're hearing company after company in the East Coast telling workers you either come to work or you're being fired. And, you know, Goldman did that. They're going to let go of, 3 to 5% of their staff anyways, the underachievers. That's coming out very shortly. In Chicago, we haven't gotten to that point. And I warn everybody, don't think that's coming the way you do. There's another round of COVID coming. As soon as it comes, this mandate to go to work goes bye-bye. You can't beat that as the company. My staff has COVID and you're telling me to go into a confined space with other people in that, if it comes about. I don't know yet if the FDA approved the shots today. They were supposed to for the booster that's coming up. But once that's approved, they're doing this for a reason. COVID's around the corner. When this began 2 years ago, I know I was one of the first here telling you, this will turn into the flu situation. What do I mean by that? Every year there's going to be a booster. I did all the reading I could. Everything pointed that out. I have a lot of doctor friends that we were talking about it, and they thought it would be. And boom, that's pretty much what it's gone. So I expect that just like I get a flu shot, and many of you don't, don't tell me I'm wrong. I don't think you're wrong. I like to get my shots. At my age, I don't want to get really ill and not be able to function. I'd rather get a mild case. It works for me. It doesn't have to work for you. Higher lows, higher highs, overbought. That's what I do see. Apple, ugly chart. Now, to say that you want to, if you will, throw the party into a real tizzy, take out this week's high and you change the game. That's an outside week down. Now, what the market is doing is that's a continuation pattern. You'd already broke the uptrend when you took it out here, back all the way here, this low. This broke this whole uptrend. Now this is a continuation pattern saying prices could easily get to 169.06, but there's a wrench we could throw in the market. Normally, you rally into the release state of the new products. I think it's September 12th now. Normally. Do you know what normally happens on the release date? You typically fall, and history shows often 1 to 3%. You didn't get your rally because while we took the party away from you. Does that mean everything's thrown off? I'm always leery of that. When markets don't go to plan, always be leery. So something bad happened there, and while we did change the game, and now the question is, do we get the break anyways that you normally do to go back into the norm? You could. I just don't want to see it over this high. Otherwise, I'm still gearing up for wherever that Bollinger Band comes in. Google, this is a spot because you're not embedded. You're overbought. This is where I think pros are taking some money off the table. And that's the last one of those. By the way, that's what my news looks like when I get it. Now, this is our QT news, but I also get Dow. I mean, there are so many things I subscribe to. Bloomberg, Dow, MarketWatch, Barron's, G0. I can go on with all the names. And I know what I want to read. I type in and I want something and I get different opinions. And that's fine because I read all day long. Do I trade or make recommendations off of what I read? Never. This is my guideline. I'm old-fashioned. It's like my GPS or my road maps. I used to be able to read road maps. Kids today can't read road maps. You know that. I know that. Why do it? It's so much easier with our phone in the car. I just put mine in this cradle and away I go, or it just pops up. You know, I have the pop-up that shows out of the car and boom, it takes me where I have to go. We don't use road maps. What do you think this is, though? This is a road map. Again, here's your map. Join me this coming week. How do you do it on Thursday? And remember, we'll already have the core PPI, CPI in hand. Click up here. If you haven't gotten my invite, it was sent out about 10 this morning or so. Means you're not on my list. If it's not in your junk, do it. It's fast-paced. It's only 20 minutes. Be there on time. I typically open 15 minutes ahead of time so you can make sure that everything's working for you. If you have questions, you can always call my staff. But the link is right up here for you. I'm Ira Epstein. Have a great weekend.